Money management, saving or investing? If you're in this dilemma, follow my video and I'll explain more. Hi, I'm Michael from MDH Accountancy. If you find this video helpful, click the bell to subscribe to not miss out on any more tips. Before you answer any of these cash questions, you need to know where you are in your business cycle. So on our website, we call this the entrepreneur's journey. So where are you within your journey? Because you'll need to make certain decisions that are relevant to that journey to make sure it's successful. So comment below on where you are in your entrepreneurial journey, as we'd love to know. Now, one of the first things you need to understand is what do I need from a runway basis? Now, runway basis in layman's terms is this, yeah? I was working with a business recently whose direct costs and overheads were roughly 51 grand a month. So they knew that if they had zero income, they needed to have 51 grand a month to be able to meet all of their liabilities. So what we did was we then said, right, what are we going to be comfortable with having this amount of runway? And all runway is how much cash have you got in the bank that could cover overhead. So in this case, it was 3. So they have 3 months worth of runway in the business to be able to cover all overheads. I think this is quite a safe figure. Now, if you've got more than that, it's all very well and good, but you need to really understand how your business cycles, where it goes up and down, to see whether it's needed or not. Because if the lowest point could be even 3 or 4 months, if you've got 12, then that money could be put to better use. What's been a massive opportunity for small businesses at the minute is the way interest rates have gone up. So if you're a cash rich business, you used to get like 0.0000001% interest on any savings that you have. Now it's possible to get 4.33 and above. And you haven't got to tie this up for 97 years. This is instant access savings account. So businesses for a long time have never had it this good from a savings pot perspective, where they can earn decent money on their interest. I think it's a great opportunity, even with little things as well. If you're looking at HMRC, yeah, no one likes paying tax, but we all know that we should pay tax. We all want to pay our fair amount when you really get down to people. But if you've got your money put aside for corporation tax, HMRC pay a wonderful return for paying your tax early. Now, one, that can't do your street cred any bad with HMRC if you're paying your tax early. And who doesn't like to have the potential to earn more money out of HMRC? I know I do, because then that way you get to knock even more money off your corporation tax bill the following year. So make sure from an operational basis that you've got enough runway within your business. And if you don't know what your monthly overhead is at the minute, that's fine. Go back, work it out. Sit down with your accountant, sit down with your advisor, or even better, come and see us and we'll help you construct that figure, which will give you better clarity within your business. If you've got operational costs, that's all very well and good. The next stage would be if you're looking at business growth. Now, if you're looking at any form of business growth, that takes investment. That takes investment, whether it's going to be team, it could be acquiring a business, it could be investing in assets, it could be a big marketing push, which would then need all of that to actually deliver what you're looking to do, but you are going to have to invest money. And you either do that in 2 ways. You either go and get specific finance for that growth product, or you actually invest your own internal money. Now, there's no right or wrong answer for this. It's what works best for you. Now, I know a lot of businesses myself like to build up the money, save up for it and invest what they've earned. Commonly, that's known as bootstrapping. I think that's I think that's a very safe way to do it. But if you've got an opportunity where you've got a business where you could basically, which you can buy on finance, yeah, and I'm going to use some really basic figures, yeah. So if this business can earn you 300,000 over a 3-year period, say 100 grand a year, but the actual finance for that would cost you 50,000, you could potentially make over 3 years a 250 grand profit. Now, it's not always that easy because it can always involve management time, but what you're looking to do is, if I take all of the income from this potential project, less all the costs plus some cost for management time, do I make a return on investment? And if the answer is yes, you should be seriously consider looking on how you then acquire other businesses, if that's for you. Now, businesses come with massive risk when you're acquiring them. They're hard, they're a dark art, and they take a slog emotionally when you're buying a business. Is putting it all together, and the implementation plan is always key on whether an acquisition is going to be a success or whether it's going to be a failure. Keep that in mind. But ultimately, if you've got extra money within your business, you could invest this in other areas. So you can invest this in other areas by one, potentially putting some money into your pension and then investing that in the stock market. It could be that you're investing in other investments within your business. There's a whole host of opportunities that you've got for you. But number one is, have you got enough money to meet your costs going forward? Because you need to make sure that you're a going concern, which means you can afford to pay what you need to pay. Now, you've then got, have you got a safety buffer? That safety buffer is what I refer to as runway. So how much runway have you got in your business that if you had a bump, you had something that gone wrong and it just didn't quite work, that's going to be your safety net. And number three would be looking at what money you need to invest from a growth perspective. Again, it depends on where you are from your entrepreneurial journey. And if you want an example of that, please, I'll put a link below that you can go straight to our website. And then number four is afterwards, if you've exhausted all the options, what are you going to invest in next? Now, this could be a really complex area. It's not just accountancy and business growth stuff. This is also financial advice as well. So if you want to speak to anyone on the MDH team on either area, click my calendar link below. I'd happily jump on a discovery call with you, answer any questions that you've got, and I promise there'll be no pushy sales pitch. But also, if you're looking for a quick win on saving more money, it could be, have you done a detailed tax review? So let me start off with and give you a gift today. We've got a book that's called 75 Ways to Pay Less Tax. Click the link below, it's entirely free. Please download it today.